Rumors that the European Union might place an embargo on Russian oil supplies contributed to rising oil prices. So it's not surprising that the quotes headed for the level of $120 per barrel. Today, the media no longer discuss this issue, but European Union members have not yet issued statements denying this fact. Officials are just considering a possible embargo and even the need for new sanctions, but they have not yet provided any details. Although this scenario is unlikely since Europe is extremely dependent on energy supplies from Russia, tensions persist. Brent crude oil futures continued to advance as expected, and this move brought the quote back to the 120 area, and market sentiment remained bullish. To extend gains and reach new price levels, the quote needs to consolidate above the 121 mark on the 4-hour chart. Otherwise, a technical pullback may occur. In the meantime, oil prices keep going up. Thus, the asset will most likely rise to $120 per barrel in the near future unless the European Union brings clarity to the issue, saying that there will be no embargo. In exchange trading, the dollar-ruble pair continues to trade around the level of 105 rubles. As for the interbank market, most of the transactions are made in the area of 90 rubles per dollar. It feels like the Bank of Russia is trying to keep the Russian currency near 105 rubles per dollar. Independent market participants believe that this is an extremely undervalued rate for the Russian currency. Apparently, the regulator is not yet interested in a stronger ruble. Therefore, it can be assumed that as the situation further stabilizes and gradually adapts to the new sanctions realities, the ruble will gain value. However, given the reluctance of the Bank of Russia, this process is likely to be quite protracted. Besides, if the conflict in Ukraine escalates and the sanctions pressure tightens, the ruble will definitely suffer losses. Such risks are still extremely high. Meanwhile, gold is still trading around $1,930 per 3 ounce. The asset has been trying to get out of this sideways range for days, but its attempts have proved unsuccessful so far. Such a subdued dynamic can be attributed to the absence of any changes regarding the situation in Ukraine and sweeping sanctions against Russia. Apparently, gold prices will depend entirely on further developments in this matter. If global tensions gradually subside, gold will lose value, and vice versa. At the moment, the situation is relatively stable. That's why the yellow metal continues to drift within the range of $1,917 and $1,950. Against this background, the best way to make a profit is to trade with a view to breaking through one or another boundary of the sideways channel. Long positions will be relevant after the price consolidates above the level of $1,950 on the 4-hour chart, and in this case, the asset will have a chance of hitting for the 2,000 mark. Short positions can be considered in the case the price fixes below 1,915, and the level of 1,900 can be seen as a target. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you in our next release.